We've heard it said many times, your home is your biggest investment.
It is. But in the last couple of years, the COVID pandemic has turned the housing market upside down.
In this episode of Let's Talk, what you need to know if you plan on buying or selling a home in 2022.
My name's Michelle, and I'm a longtime realtor from Tulsa, Oklahoma.
And I'm her husband, Mark. I've spent more than 40 years as a TV news anchor and reporter.
Together, we've started a podcast called Let's Talk,
where we dive deeper into everyday topics that matter to you.
And we have fun doing it.
So what are we waiting for? Let's talk. We had a story on the newscast this week that said that Americans are more worried about the economy right now as we head into 2022 than they are about COVID, which is kind of surprising to me because we're right in the thick of COVID right now. Mm-hmm. Inflation last year was up 7%, the highest since Reagan was office.
Wah, wah.
We got a picture of him behind us there. That was like more than 40 years ago. Inflation 7%, and part of the economic concerns of Americans are home prices and home buying, home selling. We're going to go over the trends for 2022. We have two of the experts, veterans of the housing industry here. Of course, Michelle Bradshaw, my wife. Woo! There she is. And she's been a realtor here in Tulsa with Coldwell Bankers Select for more than 20 years.
Yeah, I started when I was 12.
Yeah, thank you.
I thought she was saying she started when she was 40.
40.
And that last voice you heard is Karen Gurley. She is a mortgage banker here in Tulsa. Hey. Let's hear more about yourself, Karen.
So I work for a local company here. It's a local bank, First Oklahoma Bank, and Michelle and I have worked together for several years. I started in the mortgage industry years ago, over 20 years ago.
She was
I'll
also
just leave
12.
it that way, yes. And then got out for a little while, raised my family, and then I've been back in it again for about 7 years.
Yeah.
Right.
So I was trying to think where we'd start, but I think I'll go back 2 years. I'll ask you both, what was it like 2 years ago, right now, pre-COVID, with the housing industry?
Okay. Do you want me to go first? You want to go
Sure.
first?
Go ahead.
So pre-COVID, everybody was happy buying houses. And then all of a sudden, in December, January, February of 2000, starting 19 and then 20, things just stopped. Literally. You remember me telling you this. I just said, I'm going to drown. Nobody's going to buy anything this year.
You thought this was going to go back to the recession of 08, 09.
I have PTSD from that, and so I always do think about the couple of recessions back that I went through, and I kept telling Mark, I'm not doing that again. I'm not.
Right.
And then in March, we just rolled. 2020 of March, I don't know what happened, but people just woke up from their coma and said, I'm moving. I'm building something in the house I have now. I'm going to move and have a compound. We're going to bring mom and dad in from other states. It went crazy, and it was a new kind of norm for realtors all over the country. It wasn't just isolated in Tulsa, Oklahoma. It was everywhere. I have friends and relatives that do real estate all over the country, and I was calling people, talking to them, and seeing what was going on. Same exact thing.
Yeah. Karen, from your viewpoint, what was it like? Pre-COVID?
Pre-COVID was very consistent, very steady. People were really enjoying the experience of purchasing a home. And we did have a couple months as lenders that things froze up, but the refi market just went crazy for us, as well as then in about spring of 2020, the purchase market picked up again. So it's been pretty much foot on the gas since 2020.
Have you come across a period of almost 2 years now of such busy work for you?
No, these are the last 2 years of my life have been the busiest years, but they've been actually really enlightening and encouraging in some areas. Obviously there's a lot going on in the world, but everybody became quite a bit smarter with technology, which was huge for our industry. Mm-hmm. So it pushed us to where I think we really needed to be, but we weren't going to get there that quickly.
So then we're thick into it with COVID and March of 2020, and we're still in it now. And
Which we thought we were going to be done.
Right. We thought we
now.
were going to be done.
Yeah.
And it's really nonstop for you as far as right now we're in January, and typically this is not the busiest time of the year for home buying and selling, is it?
It is not, but I usually am very busy in January because my customers start calling me in January. They're ready to move. Christmas is over. They're putting their Christmas things away, and people are calling me and saying, Michelle, we're ready to sell our house. And that's what's happening this week. It's great. I'm kind of back to normal in that respect. I have most of my customers are downsizing. So they've built up with me over 20 years, and now they're downsizing. A lot of them are bringing their parents in to move in with them right now.
Let's talk about some of the issues that we've dealt with in the housing market in the last year and a half, and what the trend will be for 2022. Let's start with mortgage rates. We're hearing, Karen, that the feds are going to increase the interest rates several times this year.
They said 4 times.
4 times. How does that affect mortgage rates?
Well, that really doesn't affect us when the Fed increases their rate. What they're doing, though, is they've been basically buying bonds for the last couple years to keep the rates down. Now they are backing off on how much of the bonds they're going to buy, which is going to cause rates to increase. So all the predictions are by the end of 2022, the rates will be at about 3.7.
What are they right now?
We've had a rough week with bonds this week. They're at 3.375 today. And close
You're talking
to
about the
3.5.
mortgage rate for a 30-year?
Correct, 30-year fixed. Yes.
And how low had they been? I think last year we hit a historic low last year?
We did. They were at 2.5, 2 point. We were doing 30 years at, I think I've probably locked one at maybe 2.375.
And 15.
And 15 were, they were really low. So,
right.
Yeah.
So they're projected to go up into the high 3s this year.
Which is still historically
it's
amazing.
Low.
Who can remember?
Amazing.
Who can remember what they were like, 20, 30 years ago?
Our first house.
Right. Our
Do you
first
remember?
house, we were in the double digits. We were like 12, 14%. And of course, before that, they were like in the high teens or in 20s.
No, my mom was a mortgage officer in Los Angeles for Wells Fargo in the 80s, and she was selling loans at 18, 19%. Yeah. Can you believe that?
Right.
Right.
But she was still selling it because
she was
people
a top
still
producer.
had to.
She was amazing.
Right.
Yeah, she was winning awards, and I was a kid. I didn't even realize how great that was.
Karen, you've been doing this a long time, so you remember back to those days when they're a lot higher. Yes. How much more difficult, or was it more difficult to sell loans back then than it is right now?
It was more difficult, and in certain spots. Other spots, people were doing stated income loans. That's why we hit 2008. So it's always been an up and down market. But right now, 3s is a great. Tell your grandparents you're going to get a 3.75. They're going to laugh at you.
That's true.
They're going to. What are you complaining about?
That's
so.
True.
It's been, with the changes of our economy comes different compliance regulations on all of us.
And perspective is this: housing prices are higher.
Yes.
So first-time home buyers, so difficult for them to jump into this market.
Let's talk about home prices now. Last year, I think on average, I read that they went up 20%, which is quite a bit.
Wow.
And historically, our part of the country doesn't rise as much as the two coasts. Right. But this year, or in the last couple of years, they have gone up.
We're gaining, which I'm so happy. I'm glad to see Tulsa gaining in our values because we deserve it. We're a real city now.
Yeah.
Yeah. People really want to be here.
Well, and it's obviously it's been to the advantage of the seller, not the buyer.
Yes.
Right.
It depends what side of the coin you're on. But, I mean, in my opinion, I tell people all the time, if you don't jump into the market, it's going to go up. So if you want to jump into the market and sell your house, you're going to make money off of your house, and then you're going to probably pay a premium for the house you're going to get. However, next year, that house is going to gain as well.
And Karen, you had an example of home prices appreciating.
Yes. So in Jinx, Oklahoma, this was from GTAR, the numbers. The average median home price in December of 2020 was $274. In December of 2021, that same home was $309,900. So basically $310,000. Predicted, if we are conservative and just use a 5% appreciation rate for 2022, then that same home will be about $325,000 in December of 2022.
So what are the lessons we can learn from that?
So the lessons are, if you're thinking of purchasing a home, you need to do it sooner than later, because the prices are continuing to rise, as well as interest rates, and that can take you out of the game.
Right.
So you just need to speak to a lender, get pre-qualified, make sure that they hear you and your wants and needs, because the truth is, for me, I'm going to put together a strategy and give my clients options and say, here's what they are if the rates are at this rate, here's what they are if they go up. And so if it's not me and it's another lender, just make sure you're getting options that fit your financial plan.
Perfect. Yeah. True.
You mentioned too first-time buyers, and a lot of those have been priced out of the market the last couple of years. They've had a lot of trouble.
It's rough. It's rough.
It is, yeah.
A lot of times people are coming, especially right now, they're coming in with cash. Cash is king. Cash has always been king. And so first-time buyers don't have that. I'll give you a great example is our son Tommy in Denver. It's not the same in Denver that it is in Tulsa, Oklahoma. That pendulum swings way up, and Tommy, he's looking at houses that are $400,000 to $500,000 as a first-time home buyer. It's hard.
It is.
Yeah, that's rough. I mean, he looks at our prices and he's thinking, man, if I could buy that in Denver, that would be great. But,
yeah, you mentioned earlier about earlier generations or grandparents with the mortgage rates, also home prices, because our parents, our grandparents, they would laugh, because back then we would laugh to what they had to buy their house at, because I think my parents, they had a huge house, bought it in the 50s, built in the 50s, and it cost about $25,000.
That was in Oregon.
In Oregon.
And my parents' house, same deal in Los Angeles was, if I can remember right, I think my dad said it was $55,000.
Right. Yeah. And a few years later,
it's worth
they
$1 million. Yeah.
Oh.
Yeah, that's crazy. Yeah.
So let's talk about inventory as well, because of supply chain problems and other issues there, the inventory has been low. And, of course, that jacks the price up as well.
Well, and the building cost. If you're going to be building a house, you just have to be prepared for the builder to come back at you and say, building costs have gone up, and so the house that you were going to be building is now going to be $25,000 more. That is not exaggerated at all. In fact, I'm probably really low on that.
Well, or they're doing what I'm doing a lot of the owner carries the construction loan, and they do it just based on the builder's going to make a percentage, a flat fee percentage, and then as costs are projected up and as they come in, the customer that's passed to the customer.
Right.
What do you think this year holds for inventory? Do you think we're going to have more homes on the market?
If I looked right now today, on the 13th of January, I would tell you that it is at an all-time low inventory. It's very low. So I need some listings. Let me sell your house. I promise I'll find you another house. Last year, I'll give you a couple examples of how I found people's houses. I did this, I'd say 4 or 5 times with customers. They would tell me, hey, Michelle, we're looking to sell our house, but we don't know where we're going to go. And I would just start calling people that I knew had that kind of house. And then I would talk that person into selling their house. Then my people would buy that house. And then I would have to find another house for that customer. And that's just how I worked, which was great because I have my contact list that I can do that with. But that was the best way for me to help people get into a house. It worked.
Historically, right now we're in the dead of winter. Historically, in spring and then summer listings, there are more listings.
Oh, yeah. They pop up like flowers. They do. I tell people that every year. Yeah. So actually, if you get your house on the market in January and February when it is low, you're going to sell that sucker fast. I mean, you're going to sell your house fast anyways this year, but when the inventory's low, you're really going to be able to sell very quickly.
So to that, you need to make sure that you're qualified and you know how much, if you're going to purchase another home, how much you're able to afford and what that's going to look like before you even list that house, because it could happen in a day.
Which gets me to my last point here. You need to be prepared.
Yes.
So when the moment comes, you have to be ready for it.
Yeah, you got to be ready to jump. I was just talking to a customer last night about that, and she said, well, we're getting in the mood. And I said, okay, but be ready, because then you got to jump. That's what I told her.
What do people need to do to be ready?
Well, Karen was right. First of all, you got to be pre-qualified. I bring in a stager and I get your house ready to be sold. And it doesn't have to be perfect, but it helps for it to be staged. I was thinking about something this morning. You know, when you get pre-qualified and then we're ready to go and we're getting ready to close on a house and somebody goes out and buys a car?
Yes.
Don't buy a car.
Yeah.
Don't even buy a refrigerator.
Yeah.
No.
Don't do that.
That never happens.
It
does
happened. You and I did it. We did that. We bought a refrigerator. We were really young. And I remember the loan officer saying, did you buy something at Sears? Remember that? Yeah. You probably don't, but no. I do.
So here's a tip. Yeah. We pull credit within 3 days of closing. We do a soft pull. So even though you've been pre-qualified up front, we're going to look at your credit within the guidelines state we have to do it within 3 days of closing. So if you opened up a new account,
you're going to see it. Yeah, busted.
Yeah.
Okay, what are some other do's and don'ts as people are looking to buy a home?
Don't transfer money back and forth between accounts. It's just a hassle for you. Really just try to maintain status quo, honestly. If you can, keep the majority of your funds that you're going to use for your home in a certain account. It just makes it less paperwork for you. A lot of the younger generation have 4 and 5 bank accounts and they transfer from this one to that one. And we just have to document where money comes from. So this paper trail gets larger and larger the more you transfer. Yeah. So that's a big complaint about people. And we don't like it either. We don't want to have to, get all these statements and stuff. So I would say, make sure you keep your money in your bank accounts. Don't take out any new credit, and really just be astute to what you're doing. If you're buying a house, you really don't need to go shopping for furniture until you're in the house.
It happens all the time.
And what do home buyers or sellers, because there's both sides there, what do they need to be aware of if they're looking to do a transaction this year?
So you're going to see bidding wars. Be prepared if you do like a house that they're going to be taking multiple offers. And if you're not prepared to be bid up on that house, then don't jump in the game.
Yeah, I've heard you tell people, don't buy it at that price because I can't sell it.
I say it all the time.
Later.
Yeah, don't go up that much. I just do the math and I look at things, and if you're okay with overpaying for it, I'm going to tell you you're overpaying for it. I'm really honest about that. And if you don't want to, then I always say, well, we can wait. We can wait for the next house. That's okay. Mm-hmm. And a lot of times they're doing appraisal waivers. So if we do an appraisal waiver, that means that you're okay with paying the difference. So
right,
be careful about that.
And I will say that for my clients, we constantly do what I call an appraisal gap strategy. So we say, okay, this is how much the house is listed at, but this is how much you're willing to go up. So let's look at the payment at this point. And then they're prepared. And then I give them, there's a lot of ways that you don't have to come up with the cash difference. There's things you can do if you have a lender that's been in it a while that is creative to help you not come up with, say, that appraisal gap of $20,000, where you can just, instead of doing that, just use a strategy with like mortgage insurance or whatever. But make sure you're talking to a lender that knows what they're doing. Makes a difference.
It's so important. Oh, there's so many times when I'll call Karen and I'll say, oh my gosh, they're doing this online mortgage, and it's just killing me. It's killing me because I don't know the lender. I can't get a hold of the people. It usually is a total fiasco.
Okay, what problems does that cause there? Does that extend the process, or what does it do? Sometimes
the buyer will get a cost sheet that comes out later with their interest rate that's higher. Their fees are higher than they were projected in the beginning. And I am not exaggerating that at all. Am I correct?
You're correct.
Yeah. Yeah. It's really disheartening.
And then who do they get mad at? They get, right.
That's okay. I have really thick skin. You can yell at me all you want.
Karen, any final thoughts as we look at the forecast for housing in 2022?
I think it's going to be another great year. I would say, I hear a lot of my clients say, well, especially young ones, my parents say, well, what about the crash? What if you're buying at the
they're
top
so scared
point? But here's the truth, like we talked about, you're really not, because your home's still appreciating. So if you buy now, you're actually going to be saving money if you wait. The cost of waiting is great in a lot of cases because your interest rates are going up as well as home prices are appreciating. So I would say, think about it. Get with an experienced agent like Michelle that's been in this business. They know how to get offers accepted. They understand the market. They know exactly what's too much or not too much for a home. And they'll walk you through the process and make sure you have an experienced lender that gives you some options and you guys have a strategy.
And Michelle, I've heard people say that we're here in the Tulsa area, like the home prices are a bubble and they're going to burst because we've never seen really prices go up like this.
Right.
How do you answer that?
I tell people all the time, we're not in Tulsa, Oklahoma. We are not in a bubble. Tulsa I've been here now. How long have I been here?
100 years.
125 years.
Okay.
And I've never seen houses appreciate the way they are right now. And I've always complained to you about that because I came here from Las Vegas, Virginia. We lived in Oregon, Texas, and California. All of those places, besides Texas, always appreciated. And when I got to Oklahoma, it took years to just see my house grow $5,000, $10,000. It was ridiculous. And so now I really feel like we did a correction that needed to happen. Whoop, hallelujah.
And we'll never go back.
Right. No, I don't think we'll ever go back.
So 2022, optimistic or pessimistic? I know that's a stupid question. Asking a realtor if she's optimistic about the coming year.
No, I would tell you the truth. I've been through several recessions, and I will tell you right now, I know what it looks like, and this doesn't look like that.
No, it's not. And the bubble was based on lenders not yeah, really, I know. Lenders not having to qualify income, stated income loans. Appraisers were getting money under the table. Now the guidelines.
What problems could that cause?
Imagine.
I remember stated income, and I remember thinking, oh my God, they don't even have to prove how much money they're making. And I knew there was something wrong with that. I knew, and they were giving them money to close.
Who wouldn't see something wrong with that?
There were times
obviously
we'd be at the table and the buyer was getting a credit and getting money back to buy a house. Yeah. That was crazy.
I know. So that's not happening. And that's why the bubble happened. This is not a bubble. This is really, this whole environment has been created by lack of inventory. This is legit. There's lack of inventory.
That's right.
So,
yep.
So we solved the inventory problem.
We're done.
And we're done.
That's it.
Yep.
Okay.
Yep. Let's go to Taco Bueno. All
right. Thank you, ladies, for that insight, expertise, and we'll see what's going to happen in 2022. And I'm sure a lot of people are interested in buying and selling this year.
We'll do an update in December.
We will. All right. Good. Okay. And good luck if you're going to buy a house or sell a house this year. And thanks for joining us. If you like this, hit the like button and also subscribe to our podcast. We'd appreciate that. We hope you've enjoyed our podcast and thank you for spending your time with us. We'll see you next time for another episode of Let's Talk.